Hello, I'm Juliette Sallie. In this week's edition of IG Macro Intelligence, we take a look at the outlook for Australia's largest financial banks, known as the Big Four. The S&P ASX 200 Financials Index has had a healthy start to 2024, outperforming gains in the main ASX 200 index and reaching a 16-year high. The index is up 22% over the past year, more than double the 11% gain in the ASX 200 over the same period. And it's gained 8% year to date versus a less than 1% gain in the broader index. It contains the Big Four banks and 24 other companies that are classified as members of the financial sector, such as Zip and insurer QBE. Many analysts are starting to urge caution over the recent run-up in the banks, specifically the Big Four of Westpac, NAB, ANZ and the Commonwealth Bank. Macquarie recently downgraded all four to underperform and lowered their 12-month price targets, citing that the banks are trading at peak multiples without a clear fundamental reason. They believe the economic and stock-specific settings that underpinned banks' outperformance during previous rate cycles are not evident, and they see limited scope for banks to surprise in the medium term. And then alone, CBA shares are rated sell by most analysts, according to Reuters. UBS analysts wrote recently that very optimistic assumptions are required to justify the recent run-up in bank share prices. Citi is most bearish, with an $82 price target for CBA and a sell recommendation, while Ord Minnett recommends shareholders hold on to their stock but resist adding further at these levels. The average broker recommendation for ANZ, Westpac and NAB is a hold, according to Reuters. Well, the somewhat negative outlooks for the Big Four are in sharp contrast to smaller financial players, with the average recommendation for Zip a buy. Despite the broker downgrade from Macquarie, technicals show some of the banks, including CBA, have further room to run. ASX TradeWatch indicators show CBA appears to be in a long-term uptrend, with both the 20 and 200-day moving averages sloping upward. This is seen as a signal the stock can continue rallying in both timeframes. Similarly, the charts show Westpac is in a strong bullish trend, with the 5-day moving average of the stock moving higher than the 50-day. Both the 20 and 200-day moving averages are also trending higher, and the trends are supported by some brokers. Ord Minnett recommends an accumulate for Westpac, while Jarden maintains a constructive neutral stance on the financial sector, seeing improved capacity for dividends and more reasonable bank valuations. Jarden's preference is NAB and Westpac, both rated overweight, followed by ANZ on neutral and CBA on underweight. And that is your IG Macro Intelligence for this week. We'll see you next week.